All right, let's get a check on the fixed income market. And to help us unpack this, we have Chuka, Mr. Chuka Nwachukwu. He's a group head, balance sheet management at UBA. Great to have you. Happy New Month.
Good morning, Daladi. How are you?
I'm fine, thank you. So let's start off with the fixed income market performance in February. What would you say were the key trends you noticed?
Yeah, thank you very much. So in February, we saw a slight decline in yield on the fixed income market, on the bond side, and especially on the T-bill side. We saw yield decline by almost 150 to 250 basis points. The last auction dropped by about 189 basis points, and so that gives you an idea, what I mean when I say that yield had dropped significantly. We expect to see this continue, into this new month. On the bond side as well, we've seen yield drop as well, but not as high as that of T-bills. But I mean, gradually the bond yield is declining.
So, what do you think contributed to the drop in yields for the T-bills?
I think it's basically, if you see what the DMO, in extension, the federal government is doing, they want to borrow, but at the same time, they don't want to borrow, too high, because of course the cost of debt is already too high, almost over 95%. So the decline in yield, it's expected, being that the government already has front-loaded, what they intend to front load in this first quarter, and so they are not so much aggressively in terms of borrowing from the fixed income market. And again, another thing again is liquidity impact. We've seen over the past 1 month well over 2 trillion matured in place of bond as well as T-bills and then OMO as well. So those liquidities are in the market, and then of course investors are trying to see how much they can pick from the market, and that has further depressed the yield.
And did you see any impact, from the rebased inflation data we got in January, for January in February? Did that have any impact, on the market, or are you expecting more kind of reactions to that?
Yeah, absolutely, and that's one of the major contributions, in terms of decline in the market, and we've seen it played out in the secondary market, especially on the T-bill side. And so, when inflation dropped by 34% to 24 levels, and that shows you that the government is beginning to meet the target of 15%. And so, it's no perfect. Investors obviously know that this trend, we further decrease the yield, and so people are trying to buy as much as they can, front load, like I said earlier, as much as they can, because we see this yield going to 13%, 12%, in the next two quarters. We see it decline to about 11 to 12%. So it has a major impact, in the fixed income market.
And today, it's another Wednesday here. We have an NTB auction. What are you expecting?
Yeah, we see an expected decline in yield. Last auction, the government issued about 700 billion, and then 774 billion was sold. Subscription was well over 2 trillion. So you can see the type of liquidity in the market, and you can see why the yield continues to drop. So today, DMO is offering 650 billion. We expect to see, of course, oversubscription, and then hopefully they will oversell. But then we also expect to see declining yield. The last auction, 1 year, printed at 18.43, and that's about 189 basis point drop from where the previous one came out at 20.32. So we expect to see yields further drop, maybe about 50 basis points from the last 1 year result, maybe around 17.75 levels. So we expect to see further drop in yield, like I said earlier.
All right, and looking at the naira now, it did close at about 1,491 naira to the dollar. The NFM, that's for the NFM rate. So looking at February altogether, I guess it was quite bullish for the naira.
Yeah, yeah. I mean, the naira has actually performed incredibly well in February. Even in January, we've seen stability around 1500. For example, yesterday it traded around 1505. Currently, this morning it's trading around 1503 to 1505 levels. So we've seen stability, and then of course that also boils down to what the CBN has said earlier and what they are trying to do. They are trying to, to flood the system, the market with a lot of dollars, and that will also, help reduce the demand. On the parallel market, for example, we've seen them intervene, as well as they've also intervened in the in this, I mean, the market where the players, the banks played in. So we've seen gradual, decrease, in demand, as well as more increase in supply. And so, I mean, like I always say, simple economics, when demand outweighs supply, of course the price will drop. So we've seen stability, and I'm hoping that this stability will continue into the second quarter or the third quarter.
Yeah, it's quite beautiful seeing supply outweigh demand in the FX market. I hope that keeps going. But do you think the CBN has the firepower to keep intervening even in this month of March?
So currently, our external reserve is around $38.9 billion. That's, for me, is healthy, but I don't think it's healthy enough for CBN to continue to intervene. However, CBN has also been able to raise, or federal government rather, has been able to raise dollars through other means, the dollar-denominated bonds, and as well as other factors. So we've seen this trend, that government gradually is telling us that, look, they have what it takes to, to defend the naira, and then that they want to keep the exchange rate stable at this rate. And one of the most important thing that they've done is the convergence between the official market and then the parallel market. So now you don't see that huge difference. And so a lot of customers prefer to even come to the official market, to get dollar, because of the fact that, number one, official market is now gradually being liquid. And secondly, I mean, it's safer, to play in the official market. So I think that, as they go on, of course, the oil production has also increased, and that means more production. That means more sales, and in extension more revenue. And so this and so many other factors will help to to maintain stability. And then of course, government, CBN in this case now, will have enough dollar to be able to defend the naira. So I see it very stable, like I said earlier, within this range of 1500.
Right, I guess 2025 is looking like a year of stability, for the naira with what we've seen so far. But there's a lot of talk about the tariff wars right now, with retaliatory measures by countries being placed on these tariffs. But how do you see this impacting, what we're seeing with the naira right now and the CBN's ability to keep intervening? Are you seeing any risk there?
Well, basically, I mean, the tariff war is happening within the major economies and the major, I mean, the big countries. So I think that that should be a plus for us in Nigeria. Because we will see a lot of these investors, coming into developing market like us. So for me, I think that the tariff war, is all politics, number one. Number two, I don't really see much impact, on what is happening here. I think that the government is basically focusing on, stability, inflation, reduction of inflation. But for the tariff, I do not see. Even though it would have affected us if Nigeria is a major exporter of some of these items or goods that are tariff is affecting. But then we only export oil, at least for now. But it doesn't really affect us as it were. But if anything, I think Nigeria should benefit from it because we see some of these investors, moving into our market where you have rates as high as 18, 19, 20%. So why would you want to continue to play in the market where uncertainty is, at least for now, pending when the tariff issue is resolved between the major countries, America, Mexico, and then Canada for now.
Right. I guess our market is looking quite attractive at this point. But thank you so much. It was great getting your perspective. That's Chuka Nwachukwu, who is the Group Head, Balance Sheet Management at UBA.
Thank you very much, lad. Thank you.
All right, we'll take a break now. When we come back, we'll find out what's going on at global economies. That's in a moment. Just stay with us.